This conference will now be recorded.
Okay, well, hello everyone. My name is David Myers. I'm the Executive Director of the Conservation Finance Alliance, and I'm, we're really um, thankful that you could all take some time out of your busy days to join us for this discussion. Um, the the topic, which is coronavirus and conservation finance, has been obviously a topic that we've discussed once before. And there have been a lot of online discussions about this issue. Obviously, we're all living through a situation that's, you know, quite rare and quite devastating for many people around the world. Much of which is in a way only just starting, although some countries seem to have a handle on it and are trying to move out of lockdown. Many other countries have yet to experience some of the more difficult and crippling challenges of this. And so, what we driven in part by Sean Nazarelli's um, suggestion, we decided that we would have a series of discussions online to explore how COVID-19 interacts and affects the situation with conservation finance. And so, what we're going to do today is quite interesting. We have a few of us will sort of present some ideas. We have Simon Zedek from Vivid Economics, who will be talking a little bit about debt. And I'm going to be talking a little bit about economic stimulus later on. But we thought we would start with somewhat of an interactive approach here. And Kumar, if you could pull up the slides, then I can just run us through a couple of introductory slides, and then introduce us to Sean, who will sort of take us through this interactive part. So uh, this is again an idea that Sean had, and I really like it. I think it's going to be useful. So it'll help sort of orient us for this discussion. So um, so just a quick Kumar, just change the slides when you feel it's appropriate. A quick introduction to the Conservation Finance Alliance is coming up, but just this kind of approach that we're using is based on a paper that was written and released not too long ago, which is the next slide. It shows it's called Conservation Finance: A Framework, and these are the authors and the contributors. The paper can be downloaded from the CFA website, and it has a definition of conservation finance, but it also goes into a proposed taxonomy, and we're going to be using that taxonomy in this exercise and in our thoughts. So if you go to the next slide, just a quick description of the CFA. As you know, it's a leading global professional alliance for conservation finance experts, practitioners, and organizations with the mission to promote awareness and expertise and innovation in conservation finance globally. We have 4 working groups: protected area finance, environmental funds, marine and coastal finance, and innovation. And the innovation group is leading the CFA incubator. We've also worked on practice standards, updating the Conservation Trust Fund practice standards currently, white papers and reports, and of course the global network and webinars, which you are all part of. So the next slide shows just a few thoughts on the taxonomy. No taxonomy is perfect. We figured that it would be better to get something out there that would be a useful tool to reflect the diversity of tools available. And there's a lot of overlap among categories. Most of the mechanisms work in combination, so there's in a way very few sort of pure instruments that work in isolation. And we're going to talk a little bit about debt, and you'll see debt conversion. You'll see that's quite a complicated one. But just trying to move forward, then the taxonomy is based on 7 main categories here. Return-based investments, which are types of classic sort of capital investments that where the investor is seeking a return. Economic instruments, which are often used by governments to incentivize and align incentives between the private sector and the public sector. There's a whole range of them, and Sean will go into them in a little bit. Grants and other transfers, these are sort of classic official development assistance. There's a range of mechanisms that work with a focus on business and markets, including supply chain work, corporate sustainability, things like that. Public financial management, if you've ever heard me talk before, you'll realize that this is probably the most important source of financing for nature globally. It predominates, and doing better at managing that is important. The 2 other categories are risk management, which involves insurance and a whole range of other tools, and then financial efficiency, which is basically getting greater outcomes from the finance that we currently have. And the next slide shows these 7 categories and the next level. So you can start to see some of the details, which we'll be actually getting into when we're going to ask you all to give us your opinion of these different mechanisms in terms of their situation with regard to COVID and the current crisis. So without getting into these details, let me pass it over to Sean. And Sean, I think you and Kumar will take it from here, and then I'll come back in a bit.
Okay, thanks very much, David.
Oh, there's some feedback there. Is that working out?
That seems a bit better.
Okay, great.
Great. Thanks a lot, David. Yes, as we were talking, or as David's already mentioned, we were talking about trying to make this webinar a little bit different, a little bit more interactive, rather than just a few comments at the end from the people. We'd like to structure this in such a way that we get your feedback and input on a variety of these instruments and what we think about them. So the idea here is, for each of these 7 categories, Kumar has very quickly and adeptly created a small web page in which we can each of us reflect on the various instruments that are presented and decide whether or not what do we think about their feasibility given the current situation. Now, the COVID situation has obviously changed a lot of the dynamics for a lot of these conservation solutions. Some of them are in fact probably more viable or even more likely to generate an economic return than they were, say, a year ago. Others of them are obviously much less productive as mechanisms today. So what we'd really like to do is get your feedback on that, and then we'll come back to it at the end of the whole seminar and talk about perhaps what's the next steps in building that into a more systematic reflection for the whole conservation finance community. So Kumar, maybe you put the next slide up. Kumar, okay. So the first set of instruments we're going to talk about are, as David mentioned, the first category that CFA identified were return-based investments. So these are investments that are looking not only for positive environmental impacts, but also specifically for financial returns to business owners or investors. And the mechanisms as set up are, or as identified at least, there's a lot of them, but the sort of 7 or 8 main ones here, we're talking about things like microfinance, we're looking at peer-to-peer investing, crowdfunding is taking on a new role particularly. We're looking at incubators and ventures capitals and angel investors coming in and looking at the conservation sector as an opportunity to make some money and possibly invest in interesting new ideas. Private equity is available, debt for leasing, bank loans, trade finance. Of course, the capital markets, which, as all of us have known, are taking a very significant hit in the last couple of months, and then sustainable investment strategies. So, Kumar, can you put in the comment box, in the chat box, please? You can put the link to the web page, and then maybe show everyone the web page at the same time. What we'd like you all to do is go to the chat box and click on the link that Kumar has sent through now. And you will be guided to a web page where each of you can vote on what you think. We'll give you a minute or two. Which of these mechanisms seem to be more viable or more productive given the vast and drastic changes that are taking place in the world economy at the moment? And which of these do you think that are really very, very unlikely to produce a revenue gain for conservation in this immediate crisis period? So Kumar, can you pop open the web page to show everyone as well? It's a very simple Google Forms exercise with each of these 8 mechanisms. Kumar, can you show us that that web page? I hope most of you can see this, and I hope most of you can go to it using the link in the chat box, please. Just click on it, and you should be able to open up and see this web page that is showing the 8 mechanisms. And what we'd like you to do is each of you think to yourself, which of these mechanisms, whether it's the angel investors or the private equity, which of these you think are more likely to bring us a financial return, given the changes that COVID-19 has given in the overall economic climate. And we'll give you a minute for that, and then Kumar will actually show us some of the results of what you think about it to provoke a bit of a discussion on that. We seem to have about 50 odd people on this call, so perhaps we shouldn't take longer than a minute or two to fill in. Okay, I think we should now have Kumar. Have we got people coming through? Is this working? Is this functioning as a mechanism to gather responses from everyone?
So the way it's set up currently, we're unable to see results from return-based investments. So Sean, if you can give me access to that file.
Yeah. You should be able to see that. Can everyone see their own results once they've filled it in, or is that also not happening?
Yes, Sean, I was able to click on to see the results, and I've got that up. If you just click on, after you submit it, if you click on see previous results, I think was the see previous responses. If you click on see previous responses, then it gives you the outcomes. So Well, I've got it up on my
Kumar, do you want to
computer.
share? Do you want to
I
share
can,
that then, David?
I think I can. Yeah, let's see. Oh, wait, Kumar's got it there. Right.
Excellent.
Okay.
Okay, the idea here was to just quickly have a few results come through, and then try to look at what people thought were really clear winning and losing mechanisms. I suppose we can talk about them in the overall sector. Can we see that well? I hope everyone can see that. Seems fairly clear here that in terms of these results-based, return-based investments, people are looking at peer-to-peer investing as perhaps one that is showing more positive, and angel investing is slightly up over positive, whereas the one at the end, which is sustainable investment strategies, is by far the one that we all seem to think is got a lot more potential than the rest. Don't know if anyone wants to come in and have a comment on that. Again, you can put your comments in the main comment sheet, and Kumar will help manage those comments. I think clearly sustainable investment is showing up as something people are increasingly interested in the recovery strategies to COVID. Certainly, as we're opening up, people are looking into what ways we can have a green recovery. And in fact, we'll have David speak a little bit more about that a little bit further along. All right. Thanks very much for that. I think we're getting some interaction, though people are still a bit shy to talk in the chat. So maybe we'll move along to economic instruments, which is our second category in the CFA framework. This is the category that involves a lot of these economically related taxes and fees and charges. So we're looking at, say, user fees, tourist taxes, the green taxes on fuel, on airport taxes, for example, in a number of cases in Central and Southern America, along with tradable resource use permits. So trading between, for example, fisheries use areas, fines and penalties, again, where we're having illegal use take place, compensation and offset schemes. These are a variety, again, a wide range of compensation and biodiversity offset or carbon offset schemes that are looking at providing finance for conservation. And then as well, we're looking at deposit refund schemes and environmentally motivated subsidies. So once again, Kumar has a link for you to come through. If we use the same link, it's the same link, right, Kumar? We should see a second section that we'd like you to. It's the same link, and you can see the next section. On economic instruments. Again, we'd like to click on the next, and you will get to the actual form there that will show you, once again, the list of those. And we'd very much like to hear your opinions on which you think. Obviously, tourism fees are probably not doing so well at this point in time, but some of the others. Let's see, are we getting some responses now? Yeah, we've got about 26 responses now so far already. Again, yeah, pretty universally negative here, although people are thinking that the compensation and offset schemes possibly more neutral, and actually quite a number of people are thinking that compensation schemes may increase. Just Not sure if anyone wants to say anything about that particularly. I think certainly in jurisdictions where we do have upfront compensation schemes where people like wetland banking and so on, and there is an opportunity to invest in restoration schemes that may provide revenue further down the line. Okay, thanks, Kumar. Do you want to pop up a results screen for the next thing? The next slide. I think our technology is not going as fast as we want it to. We do want to leave some time here at the end for a good discussion about debt, particularly. So I'd like you all to sort of move on to grants and other transfers. This, we're looking at obviously a very significant income generating activity. This is official development assistance, private and corporate philanthropy. This is probably the one most conservation practitioners are most familiar with a great deal of money coming in from foundations and overseas assistance. And of course, conservation trust funds. And I've put down here the logos of REDLAC, the Latin American network of funds, the CAFE, the African nations of network of funds. And I put down BioFund as an example, just as a shameless pitch for my own fund in the middle of the page. But if the rest of you could vote on that same page, then we can see which ones are coming up. Here we can see, once again, we're looking at a fairly negative response to most of those mechanisms, although some people are seeing overseas development assistance as gaining potential relevance in this. And I think that's certainly, we can certainly see that in a number of jurisdictions. Is there a specific development assistance going towards the environment? And in the end, we see conservation trust funds. And I think it's clear for many people that those are quite a useful mechanism to be able to generate quick injections of funds into conservation. With remittances dropping off dramatically, as we can see from everyone voting, that making sense as people lose their jobs around the world. Remittances, unfortunately, will also take a significant hit. The last couple of mechanisms then we've just got a couple of categories. We've got businesses and markets. Businesses, particularly, we're looking at supply chain resilience and conservation businesses. Voluntary standards such as the verified carbon standard.
Sean, I think a lot of people are just
right through. If people skip through, I think we can maybe just look at the answers themselves. Yeah, so people I think are just filling them through. Kumar, maybe you want to just look at the.
But we can encourage everyone to just go ahead and keep filling out your responses to all the different categories. And please, if you're not sure of what one of them means, please feel free to ask a question. Now, to ask questions in this call, and we're hoping that we can get a good discussion going shortly for the second half of this call. We are someone's asking for example, a remittance mechanism, but we're gonna really count on you guys to raise your hand via the chat box. So what we're gonna do, we're gonna ask people if they want to speak, and we're really hoping that people do. What you're gonna do is just kind of say, I'd like to speak in the chat box, and then we'll call on you, and then you can individually unmute your mics and pose your question or share your thought, that kind of thing. So we're gonna. In the past, we've required, we sort of asked you to write out your question in the chat box. This time, we're not going to do that. So just giving you a heads up on how that's going to work. But in the meantime, if everyone can go ahead and fill out as much as you can. Remittance mechanism. So remittances are money that's returned to the country from overseas. Oftentimes you have international workers sending money back home to their families, and there's different mechanisms that can direct that money towards conservation or other aspects of sustainable development. They could be something as simple as a small tax on money transferred, but they could also be more more voluntary opportunities, there's the idea of funds being created from remittances on a voluntary basis that invest in natural resource management communities, for example. So that's an example.
I think, Kumar, are you showing can you show some of those other results from those categories, just as I think we've got as many responses we're going to get, or that we can get through at least to talk about. Yeah, can we see which ones? Voluntary offsets here, very, very strongly negative. Can you see any other strong positive ones? Supply chain resilience, that's an interesting one. It seems that quite a number of people are looking at resilience. Is obviously something it's a word that's considerably more important these days than it was perhaps a year ago, and looking at supply chain resilience is certainly something those of you who are involved in that specifically will certainly see some opportunities from providing new supply chains. And here we are in the public financial management. Here, really, the only ones that are looking a little bit more positive are reforming harmful subsidies. That hopefully will be a positive area to focus on moving forward. When we get down to risk management, blended finance looking positive, actually quite a lot more positive answers here in this section compared to most of the other sections, both for insurance and for blended finance. And then the final category we talked about, which was financial efficiency, really mainstreaming biodiversity for development, and public-private partnerships are both showing up here as positive mechanisms. And that gives us a sort of a great way to move into the next part of this discussion. We're fortunate to have with us today Simon Zadek from flip through that very quickly, from the Vivid Economics Group, who is going to talk to us a little bit about debt mechanisms and how he sees and they see some new opportunities through perhaps debt relief coming through for the conservation sector. So I'm going to pass the mic off now to Simon, and I'm not sure if you have a presentation to share with us as well. If you do, please request to share the screen.
Sure. David, can people hear me?
Yes.
Can hear you well, thank you. And welcome, Simon.
Okay. David and others, thank you very much for the invitation to join. I chair an initiative called Financing for Biodiversity, which is an initiative set up towards the end of last year, involving Vivid Economics and a number of other institutions supported by the Swiss-based foundation, the MAVA Foundation, with an aim not so much as generating conservation finance, but of improving the extent to which biodiversity is taken into account in mainstream financing decisions, and that's principally across the private sector. I'm not going to go into more details on it, but I'm happy to talk to anybody else offline. What David asked me to kick off is a conversation about debt. So in the context of the COVID crisis and the associated economic crisis, as we've already seen, the matter of debt has become a front page issue worldwide. And most notably, what is already beginning to happen is that most countries, including most developing countries, are having to go out to capital markets to raise more debt. So that's sovereign debt in particular, and are needing to restructure and reschedule debt. And there is, of course, a long, wide, broad, and deep discussion about whether there should be a debt moratorium, interest write-offs, and so on and so forth. For those who are interested, look at what Kristalina Georgieva, the managing director of the IMF, kind of pushed forward at the last G20 round, which is a moratorium on debt repayments by a group of least developed countries, or look at the Project Syndicate website to read the most recent article by Joe Stiglitz on his view on the issue of debt. The interesting question for us on this call today is whether we can achieve two wins in reducing the cost of capital to developing countries, whilst at the same time encouraging particularly conservation-rich, biodiversity-rich developing countries to invest more extensively in managing various aspects of nature. You'll all remember the not very well delivered nature for debt swap agenda now going back a number of years, kind of well framed theoretically, not really executed particularly at scale, but very much sitting on our collective balance sheet. And of course, more recently, particularly since 2011, we've seen the emergence of what one might call state contingent debt instruments. So debt instruments that are related to performance of a non-financial nature. And there are cholera bonds in Haiti, and obviously all manner of green and sustainability bonds, some of which are simply dual purpose. So pay a normal rate of interest on the bond depending on its risk profile and deliver some green outcomes, and some of which are performance related. The opportunity that we have really over the short term, which means as sovereign debt issues move into crisis this year, and maybe into the beginning of next year, is to insert a nature component to that discussion and to not drive conditionality onto developing countries, but to push developed countries to offer a reduced cost of capital in moving more debt towards those countries in return for a degree of nature co-benefit. The opportunity window, we think, is quite narrow, and the likelihood of success is not huge, as that agenda is moving very quickly, and any smell of conditionality would be treated with much caution on the part of developing countries. But the opportunity is there because there's going to be this huge explosion of emerging market debt growth, a lot coming through to sovereign players and some to sub-sovereign, local authority, corporate, and so on. And we have the opportunity of trying to shape that agenda as it courses its way, not just through individual lenders in capital markets, but also the policy spaces, most notably the G20 and a few national key jurisdictions, such as the EU and Germany, and one or two key international organizations, most obviously the IMF, to some extent the World Bank. The Financing for Biodiversity initiative is going to take forward this agenda, we hope, with a number of other players. Clearly, we need actors from within the finance and biodiversity community, but we also need to influence those actors that are the central advisors to governments and international organizations on how to play out debt over the coming 2 to 3 years. Obviously, we would welcome any inputs from all and sundry, but we will be pushing ahead first with a piece of technical work, and then in parallel, a track of work which is more focused on outreach to key G20 actors and some of the key intermediary policy advisors and influencers. David, I'm not going to go further because I know you want this to be interactive, but suffice to say, we are talking about a growth or restructuring of debt of, without doubt, hundreds of billions of dollars just in developing countries, and of course vastly more in many developed countries, including China. So the money at stake is huge, and I would call this a sort of black swan opportunity to make a difference. So low probability of success, to be really honest, but very high impact if some success can be achieved in this space. And David, let me pass it back to you to shape any conversation that we can have.
Well, Simon, thank you so much for that background. First off, really, it's a fascinating idea, and one that, as you say, it's has some complexities associated with it. The biggest one being this, fear of conditionality, and at this stage, you don't want to. No one wants to be seen as slowing down the support for developing economies in terms of their response to COVID and things like that. So there's walking a fine line, but again, I agree it's a really great opportunity and worth definitely worth exploring. So let's see if we can get a little discussion going here. Let's start with maybe Alexandra. If you're willing to unmute your microphone, and then after that, we could have Kathy McKeaton.
Sure. Hello, everyone. Very interesting conversation. Some aspects are very new to some of us. And thank you for the presentation about these depth opportunities. And I'd like to know how, because you said that it's a very narrow opportunity. So what should we look at to think if it's worth going through that that opportunity or not? It will be important to decide or to help us to think about it. Thank you.
And maybe just for context, thinking about it in terms of sub-Saharan Africa as a geographical region. Good question. Simon, I'm not sure if you want to maybe speak to that a little bit or ask.
Sure.
Kathy okay,
should I take them one by one, assuming that there will be 1,000, or should we gather a few?
We can maybe gather a few, and then I don't think there'll be 1,000, maybe two or three, so it'll be okay.
Sure.
But so we'll make Kathy McKeaton. Do you want to kind of share some ideas here?
Yeah, thanks, David. I'm sorry I wasn't in the beginning of the call because I was on another call with KFW, but I think how we position conservation is going to be very important. Nobody's thinking of conservation right now. They're thinking about health delivery. And you could effectively see a lot of debt conversion going into a CTF model for pandemic preparedness in the future or whatever. But we do have areas that and again, maybe you've covered all this in the beginning of the call, that I think position conservation well, but it may not be conservation per se, it may be more related to climate change, because there's a whole group out there studying all of the issues around changes in climate and more human-animal contact, the zoonotic aspect of this, which is actually why we're in this current pandemic. There's that, and it's interesting that Sean was presenting from Mozambique. There are delivery systems for health in several of our protected areas. I mean, I think of Gorongosa and the Beira flooding from the climate events last year. They were very well positioned to do emergency work, and many of our programs with communities have a health component. So the human wild animal conflict is another area where we have probably something to offer. But I think a lot of these areas are going to have to be brought out and related to health rather than just conservation per se. I think we might be in a long line otherwise.
Thanks, Kathy. Really interesting point there. Yeah, so Simon, maybe you wanted to just respond a little to these thoughts, and then
Yes.
after that we can go to Joe.
So firstly, just to clarify, I'm distinguishing between the use of funds and the basis on which funds are raised. And although in the conservation finance world, we spend much of our time, probably quite rightly, focusing on the use of funds. What I'm describing is an initiative focused on the basis on which funds are raised, yeah, and associated policy co-benefits. So what would that mean? So, if a country was seeking to raise additional sovereign debt because of the crisis that has arisen, and then need to raise more public debt to spend on ... whatever the things are that are important in that country. It may be health issues, it may be bailing out SMEs, it may be direct cash transfers. There are all sorts of different possibilities depending on which country we're talking about. The question is whether we can reduce the cost of capital to that country by seeking at the same time to agree on policy measures that that country would initiate to support conservation. So that need not in any shape or form concern the use of funds that they're raising, but more policy co-benefits that could arise. What kind of instruments could one use? So I've already mentioned a couple. There's the old history of nature debt swaps. That seems to me less likely because it requires, if you like, a high level of trust because one makes the deal before the performance is delivered, whereas a more recent generation of performance-based debt instruments, if you achieve X, then your cost of capital goes down or up depending on how the bond is structured. So that delivers a reward related to the performance outcome, not before it, seems a more likely direction to go. What would be the steps to take in at least moving this conversation forward? Well, on our side, there are at least 3 steps that we have in mind, and we're certainly not alone in this conversation. We can see that in the international agency side, UNDP and others are also ruminating on the same thing. Various other conservation organizations are thinking about it as well. I think we need to consolidate at a technical level what the instruments could be, how they might be most effectively applied, what the benefits would be to developing countries that availed themselves on that, and in effect what the cost of buying down nature co-benefits would be to countries that were reducing the cost of capital. So that's a sort of classic sort of geeky tech analysis. But then I think one's got to reach out and work with a small number of the policy influences that are shaping the narrative on sovereign debt. And some of those are sort of more friendly and visible to us, such as Joe Stiglitz and others. Some of them are, in a very different world, like a Larry Fink, head of BlackRock, who is undoubtedly a shaper and influencer as to how sovereign debt is modeled over the coming period. And thirdly, one needs to move it into intergovernmental policy domains. And most obviously, that's the G20, almost impossible in the Saudi context, which is this year, but very possible in the Italian context next year. Even before that, of course, we have the EU-China sort of so-called Leipzig meeting happening, although it won't be in Leipzig, it will be virtually. That was intended to be both a strategic connection between Germany and the EU under the German presidency, but obviously had at the time a lot about CBD and COP in mind. So there are various bilateral, plurilateral, and multilateral policy platforms that this discussion and process can be advanced into.
Yeah, Simon, what I find fascinating about this is, and I think this is something that we should think about for a range of different finance mechanisms that we're exploring in this time, is that how can you achieve your conservation goals and continue to contribute to health goals and to economic, stimulus goals? Because it's not that investing in nature has to be at the cost of losing something else, or at the cost of forcing a country to do something that they don't want to do through putting conditionality on debt, for example. It's not at all. These are shown time and time again to be positive return on investments from an economic perspective, and also now from a GDP perspective. investments in nature not only reduce risk of future pandemics through reducing a lot of tension and as we mentioned, wildlife trade and interactions with people, but maintaining healthy ecosystems is beneficial for almost all the sustainable development goals. And so, it's just that in times and crises like these, it gets put on the sort of psychological and intellectual back burner when there's more pressing needs that government feels like they should be addressing. And so the longer term activities, even if they are very positive for the economy, for GDP, often get put on the back burner. And this is just an opportunity to say, while we address the current crisis, let's think about how we can avoid future crises, and that investment in nature is definitely a positive economic return on investment, and in many cases, a positive financial return on investment. Let's go to Joe Pike here, and then we have a couple more ideas coming up. And
thanks very much. Thank you, David. I found that really interesting so far. I don't know if you're getting some feedback. I can hear myself echoed, but I'll mute myself in a minute. Just interested in Simon's view on the priorities within Europe at the moment. So thinking about how to mobilize investment into biodiversity as part of the green recovery in Europe specifically, because a lot of conservation finance focuses on, perhaps the global south. Do you have any view about the single most important message there?
You mean within the continent of Europe, or what Europe should be doing elsewhere?
Sorry, Simon. I'm getting. Can you hear me okay? Because I can just hear everything echoed back.
Yeah, I can hear you. I'm asking, do you mean action within Europe, or do you mean action outside of Europe?
So I'm thinking action within Europe. So we've been engaged in the last couple of years in a project called the Scottish Conservation Finance Project, and it's culminated in a document which we're actually about to release, which is a route map to £1 billion, how we might bring in the first £1 billion worth of new investment into the natural environment in ways that deliver multiple benefits. But this is, I suppose, a mixture of levies, loans, investment products, thinking about debt and what you're talking about in relation to developing countries and lowering the cost of capital and so on. If from a European sort of perspective, from the perspective of more developed nations, is there anything that you think is going to be particularly persuasive in making sure that biodiversity, as opposed to wider green issues, sit at the heart of this green recovery, which is now being talked about a lot?
Thanks. I think there's an interesting question. Let me give two parts of the answer. I think there's an interesting question right now as to whether the COVID nature narrative that has emerged quite independently of finance, of course, becomes a sort of journalistic sort of moment, or whether it becomes a more permanent part of the narrative. And I think that's a very open question. Is it all going to disappear? Because at the moment, every day, nature is on the front page, but is it there temporarily because there's a sort of slightly gossipy, semi-scientific discussion about the links between pandemics and nature? Or do we have the opportunity of really bringing nature more forcefully to the fore on a longer term basis? This is separate from finance and is more really to do with public narrative. It feels to me at the moment that it's a very fragile conversation, and one that, unless it is deepened into people's lives, it will disappear as quickly as it comes. So that's kind of number one at the narrative level. And then number two, and this is probably this is probably not going to help at all, but I'll give it a go anyway. You know, as you may have realized from my previous comments, you know, I have a particular fascination in the way in which global financial markets basically run most of what we do. And so I'm always interested in how we can intervene. So, you know, the money that's being raised to pay for furloughing, you know, SME bailouts, and all manner of other public spending at the moment, yeah, is coming through a rather odd mechanism, you know, which is that the central banks in Europe, you know, particularly the ECB, but others as well, are printing money, buying bonds, and largely buying bonds that the government is issuing in order to raise money to spend on public transfers today. And for anyone who kind of puts that together, what that basically means is the central bank is printing money that the government is spending. Yeah, and then we got a few little games going on as they run through capital markets. That's sort of what's going on. And so what's interesting in that context is what happens in capital markets. And part of what's interesting is that part of this bond buying, lending sort of magic roundabout is that what central banks are doing alongside buying sovereign debt is that they're putting huge amounts of money into so-called asset-backed securities. Asset-backed securities, you know, could, for example, be, you know, 50 million car loans bundled into a single bond. You know, that's an asset-backed security. And so there's been a lot of campaigning against the ECB, the European Central Bank, and other major central banks, such as the Bank of England, that they should be doing their bond transactions with climate and nature more centrally in mind. In other words, the process of raising money has an impact itself on what kind of bonds are being bought and the way in which nature might be further damaged because it's advantaging, for example, fossil fuel-based activities, or less damaged because they're investing money in buying bonds in areas that are more linked to our interests in the biodiversity and or climate space. So two ends, as in a sense, my two rather simplistic views. One is at the narrative level, and the other is sort of deep within the financial markets. And I think since this call is particularly about finance, I would sort of reinforce the point I made earlier, given the taxonomies that were offered to us, you know, which is this, you know, the single biggest nexus between finance and biodiversity is not the money we raise to do biodiversity, but the impact of private financial markets on biodiversity. And it will always outpace by an order of any number you care to think of the impact that we can achieve by raising money specifically for biodiversity. So we must become more literate in the way in which financial markets impact biodiversity, and we must become more literate in the way in which policy and regulatory interventions can shape that relationship.
No, thanks, Simon. Makes a lot of sense. Thank you.
Yes, thanks, Joe. Thanks, Simon. I think we're unfortunately rapidly running out of time here, and we did want to propose a few things before we wind up. So maybe if those are able to stay on for just a few minutes afterwards, that would be great. But before, because we had a couple of questions, another question from Melissa and a few others that I'd love to get to. But before the hour runs out, we were thinking of setting up a much more targeted task force. Again, this was an idea that came from CFA members. And we thought perhaps the debt issue might be a very good theme for a task force. The other possibility we've thought of was the economic recovery and stimulus packages, how to green them. So if people think this is a good idea, let us know. And then the third one that you can maybe write a chat or send an email to secretariat@cfalliance.org afterwards. Reach out to us any way you can. The other third possibility, which has come during this call, which is coming from this experience we've done looking at the different finance mechanisms, is maybe doing a bit of an analysis of that and saying, these finance tools, are showing to be more resilient in light of this economic crisis and something like that. So anyway, nothing that you need to do now, but please do reach out to us if you feel that there's a topic that you want to dive into more deeply, that you'd like to host a group. The idea would be to ultimately produce a policy brief over the course of the next month or 2 months in this topic. So while we still have a minute, if people can hang on, I don't know, Melissa, if you're still on, if you'd like to ask your question about green bonds, and Simon, if you're able to stay on for another minute or two, that would be great, because obviously a lot of interest in this topic.
Hi, Melissa Moy from, can you hear me?
Great. Yes, we got you. Thanks, Melissa.
Melissa Moy from WWF. I'm just wondering, is the focus of your coalition, Simon, more on sort of the sovereign bond market, or are you looking more broadly at green bonds? I mean, there's a whole community of people working on green bonds, including standards, and you mentioned taxonomy. I mean, the EU taxonomy, and so I think, as Kathy McKeaton pointed out, this is had started more on the climate side, and when it comes to biodiversity, it's such a thin slice of the market that if you look at what was going on before COVID, it really was not all that significant. And probably the most interesting new development was the concept of transition bonds, which actually could become even more urgent in a way, given what's going on with some of the industries that'll be transitioning. I know that CFA is more focused on biodiversity, but honestly, you can't look at the green bond markets unless you're looking more broadly, at least for many people. But I'm just wondering if you have any thoughts on that and the opportunity you see. Which segment of the market are you targeting?
Yeah, so thanks, Melissa. Good, very right, correct question. So firstly, I had the pleasure of helping the government of Nigeria to launch the first fully certified sovereign green bond in Africa. And that was when Amina Mohammed, now the Deputy Secretary General, was still the Minister of Environment for the Nigerian government a couple of years ago. So obviously there's some overlap between the green bond market and the sovereign market, the sovereign debt market. They're not sort of separate areas. So to date, almost all green bonds have not been performance-based bonds, but use of proceeds bonds. So very briefly, what do I mean? It means somebody comes along and goes, here's a bond. It's a vanilla bond, so it's rated in the normal way. It's just like any other bond, and the risk is priced like any other bond. But alongside that dividend and risk, we're going to do some funky green stuff. So it's a use of proceeds bond. So the use of proceeds doesn't really affect the price of the bond, i.e. the return to the shareholder or the return to the buyer. And that's the way in which the green bond market has largely grown. There's a separation of return and use of financial return and use of proceeds. I think what's interesting in the next part of the conversation is how one can lift that to the next level, which is, if you achieve this in your use of proceeds, then this is what happens to your cost of capital. Yeah. Otherwise, there's nothing wrong with a dual benefit bond, but here we're trying to achieve two things at the same time. One is to reduce the cost of capital, particularly to developing countries that are struggling to cope with a pandemic not of their own making. And secondly, is to increase the biodiversity, or indeed, climate or other green outcome, by tying the bond to a performance model. Yeah. So firstly, we can draw from the experience of green bonds. We can draw from the standards that have evolved across a number of countries now in a way that we couldn't in our earlier debates about net debt nature swaps, where the green bond market basically didn't exist. So today, going into the debt market and talking about biodiversity related performance, will not seem wacky in a world where the green bond market has emerged. But it isn't just a use of proceeds outcome we want, it's a reduced cost of capital to the owner of the bond, so to the developing country that we want at the same time. Finally, there's no necessary reason why that only needs to be sovereign debt. It could be sovereign debt, it could be sub-sovereign debt, so local authorities and cities, and it could even be corporate debt. So although we think country equals sovereign debt, of course that's not true at all. And if we can reduce the cost of capital to private actors within developing countries, that can often have a significant development up in the same way that sovereign debt cost reduction can as well.
Excellent. Thank you, Simon. That's what a really interesting area to explore, and sort of combining concessionary debt with pay for performance type incentives. So really interesting. I think that we've run over by about 5 minutes, but I would like to see if anyone else has any last questions, especially around the debt issue, before we sign off.
David, hi. Jeremy Ethel.
Jeremy.
I posted it. Hi, nice to see you all. I posted it on the chat line, but just a quick question, because others might want to think about it, even if Simon doesn't have the answer to it at the moment. Jeremy Ethel used to be in the UK government, currently a member of the CBD's expert panel on resource mobilisation, so related to this subject matter. So my question really to Simon was, has any thought gone into which countries might be most amenable to the kind of debt cost of reduction of cost of sovereign debt initiative he's talking about, and whether instinctively there's a good alignment between the countries who might most be interested in that and those that actually have the greatest need for significant additional investment in biodiversity conservation, protection, restoration. I'm thinking some of the most, not hotspots, but on a global biodiversity index, some of the most important countries are actually upper middle income countries. One thinks Brazil, Mexico, Indonesia, etc., which might not necessarily, but I might be wrong on this, might not necessarily be the ones who are going to be seeking the most new debt as a result of the COVID crisis. So are we going to be trying to do an initiative of the kind you've described, Simon, for countries that are of relatively marginal significance? I'm not saying they won't be locally or regionally important, but in the global picture, are they going to be less important than some of the countries that might not be interested in that? It's not to say it's not worth doing. I think it's a very interesting idea, but I'm just wondering if the question's been posed, or if you could do a bit of analysis, or somebody could, to look at that. Thanks.
Thanks, Jeremy. And yeah, I saw your note, and I've already confessed to the world of people on the call that I'm, largely clueless, but not completely clueless. So clearly, if you run your 2x2 scatter diagram, of biodiversity rich, vulnerable countries set against, GDP per capita, need for sovereign debt, complications in, COVID crisis and so on, one's particularly interested in that top right-hand corner. And we haven't run the numbers now because although we can map, what's happening in the biodiversity space, that's the data you and we and everybody has. It's not clear yet which countries are going to be most needy for, will be running back to capital markets to raise additional funds because of the crisis, most centrally. Will it only be least developed countries? Definitely not. Actually, the biggest will be developed countries that are raising more debt, as we know. And does that mean that biodiversity rich middle income countries are likely to be? I would argue yes, they will be, and those will be exactly the countries that under normal circumstances can't get concessionary finance precisely because they're middle-income countries, that they're no longer a Bangladesh, that they can't access IDA terms and so on. And so that might make it, I put this cautiously, that might make the opportunity of being able to reduce their cost of capital in return for biodiversity co-benefits even more attractive to biodiversity-rich countries than those countries that can already tap concessionary finance. So that would be a sort of slightly inverse way of putting it. But I think that the real answer is I don't know yet, because we don't know the way this is playing out in terms of who's needing what amount of capital, and that's exactly the work that needs to be done. But what we do know is that there isn't, that the trajectory of decision making doesn't allow for a PhD on this subject. That is not the timescales that we can deal with. So this is the process we need to put in place is not a deep and long research process, but a real-time engagement with the policymakers and influencers in this space. So it's literally over the coming days, weeks, and months as these numbers begin to emerge, exactly to your question.
Yeah, I agree. Okay, great. And it might also make it more attractive to some of the G20 if they know that in this double COP year or year and a half or 2 years, there is, there's an additional benefit.
Jeremy, I think you're so right. I mean, without wanting to say anything negative about CBD, because you of all people would tell me to shut up, quite rightly. I would say the potential for getting something really strong out of COP and CBD, we all know, is at risk in a way that it wasn't before. And so the opportunity of helping leadership countries see other ways in which to derive global public goods that they can champion and be profiled next to may be attractive.
Okay, thank you. Great.
Great. Well, thanks for your questions and comments. I think we'll wrap it up there, but we are, as my team is discussing with me behind the scenes here, figuring out how to continue the conversation online more effectively after the calls and between calls. And we will come back to you all shortly with something like that, probably something on LinkedIn. But in the interim, I just want to thank Simon for his contributions. I want to thank everyone for their questions and for your participation here. We're need to explore ways of increasing the interactivity, and thanks everyone for contributing to the survey we did earlier. And I think that there are some important next steps to do with regard to this crisis in regard to conservation finance. And so we look forward to continuing the discussion, perhaps with more focused discussions and breaking up into task force. So more to come. We'll reach out to you all very shortly, and wishing you all to stay well, stay safe, and hang in there. Thanks very much. We'll be in touch. David. And thanks, Sean, as well.
Thanks, everyone.